Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin. I'm your host today, and we're talking about a fascinating phenomenon in the world of finance that's got everyone buzzing: gold, the opposite of the Bitcoin effect. You've probably heard the story about Joseph Kennedy, the patriarch of the famous Kennedy family, who allegedly sold his entire stock portfolio before the 1929 stock market collapse. But is this legend true? Well, there's a good chance it isn't, and urban legends can be a sign of fiction. Still, what is certain is that gold has been behaving strangely lately. Recently, I was living in Punta del Este, Uruguay, when I coincidentally got my shoes shined before heading to the airport for a trip to Asia. The elderly Uruguayan shoe shiner asked me what I did for a living, and when I mentioned something about finance, he cautioned me to avoid the stock market. At that point, the S&P 500 was at its crisis-era low, but just 6 months later, it would nearly 10x over the next 16 years. This isn't an isolated incident. There are many examples of popular bandwagons making investors nervous. Businessweek magazine famously declared the death of equities in August 1979, capturing the widespread view that stocks would continue to languish. Yet, the stock market was just about to unleash a multi-decade bull run. In April 2019, Businessweek ran another cover asking, "Is inflation dead?" capturing the popular idea that there would never be inflation again. That turned out to be 100% incorrect. And then there was the famous Bitcoin craze in November 2017, where families across America spent their Thanksgiving holidays opening up Coinbase accounts and bidding up the price of Bitcoin to its all-time high. Crypto subsequently entered a multi-year bear market. Now, I'm seeing signs that gold is experiencing a similar phenomenon. Costco sold out its most recent inventory of American Eagle gold coins in less than 4 days, with dealers reporting crazy volumes. The media is talking about gold daily now, whereas in the past, they used to go weeks or months without a mention of gold. Even big investment bank analysts who had ignored gold or been extremely bearish are suddenly its biggest champions, with Goldman Sachs projecting nearly $4,000 gold this year. This surge in interest has led to some interesting trends. Central banks around the world are trading in their US dollars for gold, simply because they don't have confidence that the dollar will last as the global reserve currency. And central banks don't have a lot of options. There are only so many non-dollar asset classes that can absorb hundreds of billions of dollars worth of capital flows. Gold is one of the most convenient. Now, I know what you're thinking: gold can't keep going up forever. But here's the thing. Because of these capital flow trends and catalysts, we could easily see $5,000 or even $10,000 gold over the coming years. And that's where things get interesting. Gold is at a record high, but gold companies are cheap and undervalued. In fact, some precious metals companies we've published in our research service have risen by 40–60%. One has more than doubled in price, yet is still trading at a forward multiple of just 2x. This is the opposite of what happened with MicroStrategy, which owns nearly all its value in Bitcoin. The company's market cap is worth nearly double the amount of Bitcoin it holds. So, gold is behaving strangely, and it's not going to last. That's why we're writing about an alternative to gold, because many solid, profitable gold miners are still undervalued relative to gold itself. It's ridiculous.